I'd say beyond that, I think growth has slowed further. I think there's worry that oil prices could rise. And I think the other thing is the RBI is starting to signal that maybe they're close to done, so in cutting rates. And I think all those things have kind of weighed on sentiment a bit.
But you think the rupee would be largely more resilient than a lot of other currencies in the region? What drives the strength in the currency, in the Indian rupee?
I think yield. For real money investors, say long-term institutional investors, looking out 2-3 years, I think India is one of the brighter spots out of the bigger emerging market economies right now. Many are struggling, I think, with more serious kind of political and economic issues. So I think if we're right that the Fed, ECB start to ease more, I think the sentiment will probably start to turn in India's favour. The big risk is oil.
Exactly. So we'll come to that in a bit, but you see India holding out relative to the region. It's not an absolute story, but it's just, yeah, growth is slowing, but take a look at the growth numbers. They're still higher than what we can get in other parts of Asia.
Exactly. And I think that's a big factor, right, where in most places growth has slowed to pretty weak levels now, and more bonds are yielding negative returns.
Okay, Rob, when you look at, we've talked about geopolitics, we've talked about trade, we've talked about the Federal Reserve and interest rates. What is the biggest risk when you look ahead over the next 6 months?
You know what I worry about? I worry that the bigger central banks are starting to really run out of ammunition and options, and we're moving towards exchange rate being used as a policy. And so we start to see beggar thy neighbour currency depreciation.
Do you think there's a Cold War already underway in currencies?
I think
nobody's willing to admit it.
No, I think it's brewing, right? I think we have senior US officials, including the president, who's and the Treasury Secretary, hinting that maybe the strong dollar policy could be something on the table to consider whether we should keep doing it. The reality is when you start to run out of interest rate ammunition and the costs for more monetary policy easings are starting to build, I think an alternative is the exchange rate. So I think that is a risk.
Hi, I'm Emily Tan, and thanks for watching CNBC. You can check out more of our videos by clicking on the boxes on the screen, and don't forget to subscribe to the channel for more. Thanks for watching.